Welcome back, guys, to another episode of Decentralized Chain. It's Feroz talking about all things blockchain. So today we are actually going to have a deep dive into Persistence. So Persistence is a project that is founded and headed up by Tushar Aggarwal, who's the CEO. And we're going to explore exactly what their approach is and technology stack is doing in order to bridge the gap between traditional capital and DeFi. On top of that, we're also going to have a giveaway. There's $100 worth of Tether up for grabs, so make sure you stay tuned in right to the end of the video where we'll go into the competition, exactly how you can do that. And also, if this is the type of content that you like, then don't forget to hit that like button, smash that subscribe button, and don't forget to hit the bell notification icon so you don't miss any of the upcoming interviews and reviews within blockchain. So let's jump into the interview and see what Tushar had to say. Tushar, welcome to the show. Really glad to have you here. Always looking at the sort of next projects in this space, and Persistence One has been talked about a fair bit. So before we jump into what Persistence One is about, why don't you tell us a bit about you? What do you do? Yeah. Where are you from? Where have you been before Persistence One?
Sure, no, absolutely. I'm originally from India. I spent close to a decade in Singapore, got into crypto. Singapore was super active in kind of the 2016, 17, 18 era. I was working as a management consultant to the banking industry, and was looking to get into the VC industry, the quote unquote traditional VC industry. Wanted to start writing angel checks to startups as a way to enter the industry, and instead got into crypto through investments on a personal level. And then very similar to you, I started a podcast called Decrypt Asia, which was a way for me to connect with founders, fund managers, and all the various stakeholders that are involved in the industry, regulators, exchanges. That led to, wrote extensively for Tech in Asia, which is the Asian equivalent of TechCrunch, about blockchain and cryptocurrency topics. And that led to an opportunity to set up the first properly structured crypto VC fund, which was the crypto arm of a traditional VC in Singapore called Golden Gate Ventures. And so was involved in Lunex Ventures, which was this baby crypto fund of Golden Gate, as the first employee, and was involved from the very beginning in terms of fund incorporation, compliances, fundraising, deploying, both on the equity side as well as managing a liquid portfolio of tokens. And then have since moved back to India, where I'm from, sensing an opportunity in the Indian crypto ecosystem. And India being the third largest market for startups, unicorns in the traditional startup space. But India operates with a bit of a lag, so my thesis was that something similar was going to happen in crypto as well, and I think we're starting to see that play out. And so moved back to India last year, and started building Persistence, and here we are.
So what is Persistence exactly, though, in terms of what is the opportunity you've seen, and what is that you're actually building out with Persistence?
Sure, absolutely. As in continuation with what I just mentioned, so one hypothesis was the Indian ecosystem booming. The second was more in terms of how do we actually solve some pain points for someone in the world. And when I say we, I mean the industry as a whole. I think the use case still has been heavily speculative thus far, including DeFi, which is heavily speculative. Nothing wrong with that, but I think fundamentally longer term, I think if a technology doesn't solve pain points, it might there's a chance it might fizzle out. So I'd invested in multiple kind of layer one solutions, scalability solutions, privacy solutions, at the application layer, gaming, gambling, DeFi applications. So I was on the lookout for actual use cases, and came across trade finance as a use case. And so one of the family offices that I'd been in touch with as part of the fundraising activities was in the commodity trading space, and through that, Comdex came about, which is an end-to-end commodity trading solution covering both trading of commodities as well as trade financing. And then over a period of time, we realized that we could platformize it and make it more generalizable, because we didn't want to be purely in the commodity space as well. And that's how persistence came about. So it started with kind of a top-down approach, where it started with a use case and started with solving a problem. And then over a period of time, we realized that all the technology that we had created could be leveraged for multiple use cases. And so that's how persistence came about. And so fundamentally, what persistence does is, in a nutshell, is tokenize real world assets. And when I say real world assets, I mean, primarily, bills of lading, which is a document that shows that, okay, a good has been loaded onto the ship, and also invoices. So essentially, it facilitates the trading of bills of lading, and also, facilitates tokenization using non-fungible tokens of invoices, so that these invoices can be used as collateral to take out loans. Unlike crypto today, where you can only use crypto assets as collateral to take out loans.
So if I was to try and sort of just delve a bit deeper into that, so the idea is obviously a bit of lading. It has a nominal value to it, and in terms of how does that actually then translate into ultimately getting it onto the blockchain? I mean, surely there must be some offline activities that happen then as part of that process, i.e., there's validations, there's checks, there's due diligence that happens to ensure that bit of lading isn't fraudulent in any way. I mean, obviously there must be still some traditional offline element that happens, which then translates into blockchain, right?
Yeah, absolutely. And so historically, there's always been I think the narrative has been that, okay, everything needs to happen on chain. But I think the moment and I think we're starting to see that more and more as well, with Aave recently announcing, getting mortgages on chain, with MakerDAO recently announcing getting real world assets as collateral to be able to mint DAI. But essentially, you're absolutely spot on in terms of, there being certain off-chain activities, and having to trust and rely on certain, actors that, that are, verifying the authenticity of, bills of lading, for example, or the invoices that are being generated, to make sure that, those are not fraudulent. But in terms of actual tokenization, how these bills of lading for trading and the invoices for trade financing, how they get tokenized is through document fingerprinting, where essentially a document is fingerprinted, and then all of the metadata of the document is captured into a non-fungible token, so that you capture the uniqueness of each bill of lading or each invoice. And essentially then creating a singular representation of that on chain. And
I mean, if I try and understand it just a little bit more, in terms of once you create that representation, what does that manifest itself into? How is that value quantified? Is it a stable coin? Is it something that's existing, or is it?
No, it's just a representation of the value of that document on chain. And so essentially, once you have brought it on chain, then it can be used to trade. So essentially, you can trade it against stable coins. And so, that's what happens on the Comdex platform, for example, where once a bill of lading has been tokenized, it can be traded between parties, using stable coins with the appropriate, fiat on-off ramps on the institutional side. And then in terms of the value of the actual invoice, the invoice actually represents the same value as it would, in the real world. It's just that now you can use it as collateral to request for financing from the trade financier. So it's the traditional kind of trade finance use case that has been touted for the longest time within the blockchain crypto industry. What we're doing is just, historically it was that use case was created using using platforms like Hyperledger or Corda, so using private blockchains. We're just trying to do it, using public blockchains.
Got it. So it almost feels like that you have adoption there, because Comdex to me sounds like it's an existing platform that's currently available traditionally today. And I
So
suppose
sorry, go on.
No, I was going to say, I suppose the other element there is that it feels like you're almost adding blockchain to the end of that in order to facilitate or even speed up the financing side ultimately, because I'm sure traditionally there might take due diligence, all of those items. Then you've got the financial element as well, so that obviously adds a certain amount of degree of time in order to get the trades through. So here it does feel like what you are doing is shortening down the left hand side of the process rather than the right hand, right?
So Comdex is a third-party application that is a startup itself, and it was built natively from the ground up, using the Persistence SDK modules.
Mm-hmm.
So Persistence SDK modules cover the end-to-end trader journey, and it's very generalizable. It can be used by anyone, and it's open source. So all the way from onboarding of traders to doing their compliances to the actual decentralized exchange or the asset exchange between, in our case, it's NFT against stablecoins, but it could be, crypto asset, purely crypto assets itself. And then the trade financing aspect. So Comdex was built from the ground up as a native blockchain decentralized application, using the persistence technology. But in terms of traction, yes, now Comdex is an in-production application. And so Comdex is our kind of institutional focused product. And then we have a crypto native focused product as well, which is the persistence application itself. But that doesn't exist today. Comdex itself, yes, it has I think about 11 trading organizations, which are mostly small to medium sized trading organizations in the commodity space, doing anywhere between $200 million to $2 billion in annual transaction volume across the major trading hubs in Asia. So Singapore, Hong Kong, Kuala Lumpur, and Dubai. And they've done about $31 million worth of transactions. Primarily trading wheat, copper, soya bean.
So interestingly enough, I mean, a lot of what I see in this space, certainly within crypto, is adoption. Adoption is key. There's lots of projects that come and go, with so-called user bases and hoping that they'd ramp it all up. So to a certain extent, it feels like, from what we've discussed just now, that you kind of already have the adoption side already there, right? I mean, it should be fairly easy for these guys to ramp into crypto then, using the existing Comdex platform. Once the persistence element's bolted on, then you've kind of provided another avenue, so to speak. Or does adoption still become an issue for you? Do you still then need to go and find additional organizations that will want to transact in this manner?
So again, like you said, there's two elements to what we're trying to do. There's the institutional element, and we as Persistence, we're not responsible for, like I said, Comdex is a third-party application. It just uses Persistence SDK and Persistence validators in the background. But the Comdex management and the Comdex BD team is responsible for doing business development on the commodity trading side. So we have no business trying to do BD. I have no experience or network in the commodity trading space. I'm a technologist and a crypto native person. And that's part of our go-to-market as well on the institutional side, where we work closely with family offices and SME organizations that would have the networks, and then it's their prerogative to do BD, and we work on a kind of revenue sharing model, and all those revenues kind of, in our case, flow to the delegators and stakers within our network. So if you talk about adoption, so that's on the institutional side. So I think we have the institutional side a little bit figured out. On the crypto native side, what we're doing is, and it starts getting a little bit complex. Once loans have been originated on Comdex, which is essentially P2P financing, you take a bunch of these loans and you package them into different tranches or liquidity pools, as they're called, within crypto, so that stablecoin holders can come in and supply liquidity to these pools and generate returns on their stablecoins from these real-world income-generating assets. And so on that front, we will still have to figure out adoption to be able to attract that liquidity and get those stablecoin holders. And so again, that is something that's the task ahead of us.
Are you? Are you? So, I mean, similar to that. I mean, are you competing with anybody in this space then in blockchain? Who else is doing something similar to this?
Yeah, so I think the biggest player, and I think the one that has a very, very similar thought process and approach to this problem, is a company based out of Berlin called Centrifuge. And so Centrifuge is doing something similar where they tokenize invoices using NFTs as well, and work with multiple asset originators, which we call primary financiers in our case, who are the ones originating these loans, and then packaging these loans into different tranches so that stablecoin holders can come and generate returns on their stablecoins from these different tranches based on different risks and based on different risk classifications and all of that. But I would say they are the closest, and then there is one other company that recently I heard about, which is doing something similar. Is called DeFi Money Market, which is doing it for automobile financing.
Got it.
But I think Centrifuge is a little bit further along, and I think more aligned to us in terms of thought process.
So I suppose the other question that comes to mind then is, if you do have somebody similar, which to a certain extent I would say you're competing against, right? I mean, what would be your edge to attract? Because I suspect you would have a similar user base for those to kind of not necessarily migrate, but what gives you that edge then, I suppose, over your competitors in terms of people wanting to say, right, you know what, I think going forward I'm going to start using Persistent as my platform of choice, so to speak.
Yeah. So I think there's a couple of things. So one is, I think, Centrifuge's go-to-market strategy is a little bit different. They focus on freight invoices while we're focused on commodity trading. Second is their geographical focus. So they're focused exclusively, as far as I know, on Europe, while our focus is Asia. And so there is, that element. Of course, on the crypto native side, the whole world is your kind of target market, in terms of attracting liquidity. So of course you're competing, on that front. I think one thing that is different about us that Centrifuge is not doing is we have the institutional side as well as the crypto native side. And the institutional side feeds the crypto native side in terms of the loans that are originated on the institutional side, then get packaged and come into the crypto native side. But there is the option to just use the crypto native side or the persistence application to allow any asset originator to put all of their loans as a liquidity pool on the persistence application. And so, what Centrifuge is trying to do is just the crypto native side, whereas we've tried to cover both the angles. And so it's essentially kind of vertically integrating, but also integrating horizontally at the same time, which leads to a little bit more complexity, but allows us to control a little bit more on the adoption side. And so we are still dependent on other folks in terms of how much our platform can be adopted, but gives us a little bit more visibility and control in terms of making that adoption happen.
Understood. So, I mean, adoption, platforms, we've spoken about a few things. I suppose let's talk a bit more about your team. Obviously, in order to deliver a product, you tend to think you have a winning team as well. So I'm just curious in terms of, I mean, let's talk about your team for starters, and maybe then we can talk about partners and advisors that you kind of have along the way supporting you. So in terms of the team beyond you, what else is there in order to help with? Certainly BD. I would assume on the crypto native side, marketing as well. Most projects don't really go anywhere without sort of having that proliferation of content going out. So how does that sort of composition work?
Yeah. So our team is entirely based in India, and on the business side, of course, like you rightly said, we have marketing, community, and kind of BD / partnerships team that take care of those kind of respective activities, and we have a highly energetic team, as is the case with a lot of folks who are in crypto, where it's kind of non-stop. You're kind of
Yeah.
on the clock. And on the tech side, we're a little bit tech heavy, so we have a team of 13 people in total. On the tech side, led by CTO Deepanshu, we have 5 blockchain developers, and one of them kind of functions as a blockchain plus backend developer.
Okay.
And we have 1 developer on the front end and 2 DevOps guys for some of the server related stuff. And so all our blockchain developers are from this prestigious university called the Indian Institute of Technology, Mumbai, which is one of the leading tech universities in India, and has an acceptance rate of less than 1%, and so have a very very solid, dedicated, young but energetic team.
Okay. And I mean, in terms of outside bodies, advisors, partners, do you sort of are there any, or are you partnered up with any others?
Sure. So on the advisors side, we're working closely with 3 individuals that we have publicly disclosed, and then of course working with some other folks kind of in the background. But on publicly, we're working very closely with Jason Choi, who also runs a podcast called Block Crunch in Hong Kong. And Jason and I have a very similar story where we both started off hosting podcasts and then worked at 2-person funds. So he's still on the fund management side at Spartan Capital in Hong Kong. And he's been a great friend and mentor and a supporter from the early days. And he connects the East and West pretty well as well. He's a great bridge between Eastern crypto and kind of Silicon Valley crypto. Then we have Sandeep, who's the COO of Matic, which is a successful project coming out of India. So he has been, again, an early supporter and has helped us on multiple things, including, some of the stuff on the marketing, community engagement side, and obviously his learnings, in the industry through his journey with Matic. And then we're Tendermint based in terms of our tech stack. We're a Tendermint based, stack along with bridges to Ethereum. And to help on the China front, we're working closely with IrisNet, which is one of the leading Tendermint based projects in China. And so Jeffrey was previously with Wobi and now the director at IrisNet. Again, we've been collaborating on some community initiatives, and once Inter-Blockchain Communication Protocol, IBC, goes live, we'll be collaborating on some product fronts as well. So those are the advisors that we work with. And in terms of partners, the ones that we have publicly disclosed is Terra, the South Korean blockchain company, again Tendermint based, and also heavily focused on what we call quote unquote real world adoption. Their go-to-market strategy being through e-commerce payments. And so a lot of the inspiration for the technology stack was actually taken from Terra in terms of their thought process and their approach to going about creating incentives in terms of how do you ensure incentivization for the validators in the absence of inflation, things like that. How do you, for example, Terra's go-to-market and marquee application is an application called Chai, which is for e-commerce payments, with Terra SDK supporting that. For us, it's the persistence SDK, with our go-to-market strategy being commodity trading, and Comdex being that marquee use case. So lots of similarities there, and so they are a big partner for us in South Korea as well.
Okay. So, I mean, leads me on to what you're building, and obviously nothing's built for free in this world. So, I mean, let's talk a bit about raising capital and your sort of token economy. So, in terms of raises that you've done, I mean, what is it that you're looking to actually raise in total?
Yeah. So, I mean, these are things that we're not open to the public yet, and so we'll be releasing all the details as I think in the next couple of weeks, I'm not sure what's the lag between, the recording of this podcast and the podcast actually being live. But
Yeah.
at this stage, we're not publicly disclosing our fundraising activities. We were heavily, I mean, what I can disclose is that, we have some of the world's top validators already validating
Okay.
for us
Mm-hmm.
across the world. And they have been huge supporters of us financially as well. So the, investors into what we're doing. And so they were the kind of, early initial supporters last year.
Got it.
And that's how we covered up a lot of the costs. But we were a heavily bootstrapped team for the longest time, and that allowed us to stay very lean and focus a lot of very quietly
Got
sort
it.
of keep building and get traction. And then now we're moving very aggressively on the fundraising side, and we'll keep the community posted on what our plans are, what the traction has
Yeah.
been on the fundraising side, and what our plans are on the public fundraising side.
Okay, so there are plans to be potentially a public fundraising as well then.
Yeah, so we're just still kind of trying to finalize
Okay.
how that will happen and what it'll look like. But yeah, I think in the next next few weeks we'll I think we're starting to be more active and starting to starting our kind of guerrilla marketing activities.
Got it.
Was
So gotta stay
last few
tuned.
weeks were super absolutely, yeah. Last few weeks, as I'm sure is the case with a lot of people in the industry, have been super busy. And so now a lot of the work has been done
Yep.
behind the scenes, and now we're kind of fully kind of going out and engaging with all of the podcast hosts and all of the various Telegram communities, and starting to do the AMAs and things like that, and starting to be more visible.
So I mean,
yeah, but
I think similar to, I mean, still on the topic of raising, I suppose. What I'm always curious about is, yes, the raises will come and go, and you'll have a set amount. How do you sustain the ongoing development thereafter? What then becomes your revenue channel to? No one indefinitely raises, of course. You raise just to kind of get off the ground and get your supporters in. But how do you sustain your revenue model going forward? In terms of where is that derived from? How will you continue to, fund your burn rates on the project as well going forward?
Sure. Yeah. No, absolutely. So, I mean, first of all, like I said, even before going into how we'll sustain ourselves, I mean, even how we got to this point was in a very, very capital efficient manner. And so our burn overall is pretty low. Of course, now with, being more aggressive on some of the marketing activities, that burn will go up slightly. But I think, of course, one way is, of course, having, beyond what you raise, is having, some sort of, and this is unique in crypto, right? Where, typically in the traditional world, you kind of, keep raising as you go along, and eventually have a liquidity event. In crypto, it's a little bit, opposite, where you try to do an all bank raise, I guess, to some extent, although that's changing very quickly. And then you have a liquidity event much sooner, and then you kind of go from there, which obviously creates wrong incentives as well, and that's why we've seen so much kind of opportunism and so many kind of for lack of a better words, kind of scammy projects coming. And but in general, in our case, for example, one of the things that we have is a revenue sharing agreement with Comdex, where most of the benefits are passed on to the delegators and stakers.
Okay.
But we do get a certain percentage of that fee, and again, Comdex is not the only use case we have. We don't publicly talk about it, but we have at least 3 more teams that are using our technology to create their independent use cases.
Okay.
And so we'll have different revenue sharing models or different commercial agreements with each of these teams, where most of the benefit goes to the holders of the persistence tokens through kind of direct fees flow or through a buy and burn mechanism, which is also something that we're still trying to finalize. So far, we're in favor of a buy and burn mechanism. But again, that is something that is up to the governance of the persistence token holders eventually. Yeah, essentially, those are the different kind of revenue streams based on individual use cases outside of course the treasury tokens that we have, which at some level aligns incentives to the token holders as well, because since we have treasury, we want to ensure value accrual to the token and ensure that the token does well.
Oh, that's no. It's I'm always curious because you have various projects. They come in, they raise here today, gone tomorrow, or they've got lost in the whole idea of a new project coming to light, and then the next thing you know, they've raised, then they're at a standstill because either the token's lost complete value or they don't have some sort of revenue generation model in place, which is interesting. So I mean, before we wrap up, I mean, let's end with the community, I suppose. Most projects are ultimately founded on their community, or either they fall because of a lack of community behind it. So what's in plan for the persistence community, for them to kind of stay engaged and want to see you succeed beyond just those who are always looking for a quick flip, right? I mean, you're never gonna get past those individuals, but the ones that are kind of in it, they see the value in the tech, they see the value in what you're doing. I mean, how do you keep those guys engaged and wanting to come back for more?
So a few things. So one is we've been very fortunate to engage with of course, so a few things that set us apart, right? So one is we've been engaging with the kind of Cosmos Tendermint community for a very long time, and they've been, a lot of them have been our loyal supporters, and so we have that going for us. The second is we have a growing Indian community that is getting behind us, and so those are kind of some of our earliest supporters. Over the last 10 months or so, we've been running a lot of hackathons and events as part of our community initiatives through the Cosmos India community, and so there are certain plans around how to engage with some of the other chains as well, as there are more bridges built, and the crypto ecosystem becomes kind of a multi-chain ecosystem. On top of that, we have, we understand that if you look at our product, it is not the most intuitive product for crypto native people. It is a little bit complex. It is a new product. Retail folks have not had, trade finance as an investable product in the past. And again, we do have an institutional element. So in keeping that in mind, we have some very, very interesting and innovative activities coming up for the community, which is primarily through staking that we're going to be releasing. That is going to be extremely exciting for the community, and will be a great way for the community to engage with persistence and the persistence token as well. And I think I mean, this is just my hypothesis. We'll see how it plays out once we actually go public and live with it, but it should be happening by kind of mid-September or so in the next 3 weeks from the date of recording of this podcast. But essentially how we view persistence is as a suite of financial products, which will include real world products, but also sort of crypto native products. This staking product being one that folks can engage with and interact with almost right away. And that allows us to tap into the crypto native mindshare and not lose that aspect. And so at the end of the day, we're crypto native people, and like you said, communities make or break a project, and so we're very, very mindful of that. And we've kept this under the wraps, and we have kind of a small dedicated team outside of the core team that works on this product. But yeah, I mean, it's something that we are very excited to share with the community, and we'll keep them posted.
Sounds good. No, it's good to see you got their backs from what you've said so far. So, I mean, before we wrap up, any last words? Where do we go to find the latest news and events? What should we be tuned into? What should we be watching out for?
Yeah, so I mean, we'll be making a bunch of announcements over the next 2-3 weeks. around some of the backers and supporters that we have, even outside of investors. We have some great backing. So one of them is now public as well. So we just got a grant from the Interchain Foundation, which is the foundation governing Cosmos, to create NFT module and standards for the interchain world, as opposed to ERC 721, which is smart contract based and kind of exclusively focused on Ethereum. And so this is something that we're working not only with Cosmos, but kind of more in an interoperable manner across chains. So we'll be making announcements around that, and then of course certain announcements around the achievements and the traction, and some developments with Comdex as an application, and then obviously things around fundraising, and then some of the community engagement staking initiatives that I had mentioned earlier. So I think those are a few things that we have in the pipeline over the next few weeks. And yeah, I mean, super excited. I think we finally, we've received a crazy amount of, we haven't even properly started doing our marketing, and we've seen a crazy amount of response, which has been, as a founder, it's obviously a blessing, but a little bit overwhelming as well.
I was going to say.
Yeah. But yeah, I mean, it's a position that you work hard to get into. And so it's great to see, great feedback and engagement from the community thus far as well. But of course, want to keep that going and keep the momentum going for, the company as a whole on all fronts, tech, product, kind of the BD and partnerships, and then of course, community engagement.
Good stuff. Well, look, thank you, Tushar, for your time today. It was great to hear about persistence, and I wish you all the best with your upcoming events. I'll certainly be tuning in to see how it all goes along.
Thank you, Feroz. Thank you for having me.
Bye-bye. So there you have it, guys. That was Tushar Aggarwal talking about persistence from their very beginning, about the project, about the stack, about the people behind it. Interesting project, and certainly one to watch out for. Now, if you've been with me throughout this video up until now, then you must be wanting to know exactly how do you enter that competition. Very straightforward. I'm going to run it in two parts. The first part's going to be on YouTube. So all you really need to do is like the video, subscribe to the channel, and leave a comment below. How do you think this project is going to do within the DeFi space? What are your thoughts around this actual top subject in general? And don't forget to leave your Ethereum address as well. The second part will be run on Twitter. So very similar, retweet the link below. On top of that, don't forget to tag in a couple of your buddies and leave a comment. And I will pick the winners at random on the next update video. See you on the next one.